Britton's Hot Topic Seminar. This week, end of financial year taxation planning. Stay tuned to find out some cheeky ways to save some coin before the end of financial year. This week, we are joined by Ascend Accountants and one of our financial planners, Ben Kemp. Please enjoy.
Thanks everyone for jumping on. Today we're just doing an introduction and a bit of an end of financial year sort of checklist or a few flags for people. We've got the guys from Ascend Accounting on, so I'll let Andrew and Simone introduce themselves, and then we'll just step through at a pretty high level some things for people to be aware of. So you guys, whoever wants to go first.
So it's Andrew and Simone from Ascend Accounting. We're a reasonably new accounting firm in Geelong. We started about 3 years ago, and we sort of do end-to-ends from bookkeeping right up to sort of virtual CFO, advisory board type services. We do a lot of just tax compliance as well, which is why Burke, Britton have invited us on today.
Peace. And I suppose both of you guys are both directors doing the same role as well. So quick for you both, it's sort of split between the two. There's not sort of a niche area for either of you. Simone, you're doing the same sort of things?
Yeah, absolutely. So we both look after our own clients and work together to make sure that they're getting the service that they deserve.
Awesome. And I suppose the big thing for people, and again, we could talk about this for probably for an hour, is about the difference between financial planners and accountants, and just making sure people understand that, we all work together. So different areas. We don't do tax returns. Your sort of side of the investment stuff is much different to us. So again, blending those together and making sure that all strategies are aligned, especially around end of financial year. We have so many conversations with accountants and guys like yourselves to make sure that the clients are prepared. They've got everything on time if it needs to be a super contribution or anything like that. So I suppose, moving into this last phase of the financial year, which is a bit scary already. Again, there's obviously a lot of people with capital gain events and those sort of things. So again, without going into too much detail, can you just do a very basic intro, I suppose, of things people need to be aware of about potential capital gains events they've had during the year, whether it be property or shares?
Yeah, sure. So if you have sold a property and it's not your primary residence that you live in, then there's definitely something you need to be talking to your accountant about to make sure that you're taking advantage to reduce the tax that you're going to have to pay on that capital gain. And it's not just property, it is shares, it is any asset that you are selling is potentially subject to capital gains. And I guess one more thing to touch on quick, financial planners versus accountants, is that your accountant, unless they are registered with their financial planning license, shouldn't be giving you financial advice. We're not allowed to. So that's where you guys are so important.
Yeah, it's a bit of a blurred line over the years, and some people like to cross the floor. With in regards to capital gains, does cryptocurrency fall into the capital gain event as well? Is that something that people get caught up on?
Yeah, so that classifies as an asset. So if you're buying and selling crypto, we will be hounding you to get your reports from whatever wallet you're on, and then thankfully they're getting better. But yeah, that's been a definite headache over the last few years, trying to work out the gains, because obviously a lot of people don't go from crypto back to dollar. From dollar, it's from one currency to another, and each time you swap to a different currency, that's a new capital event.
I think that's a good point. I had someone a while ago try and tell me that until you took it out of crypto back into Australian dollars, that it wasn't a capital event. So again, they needed to have a conversation with their accountant to make sure they weren't going to get any surprises. I think a really quick one, and we've seen people fall for this in the past, it's mainly with property. Again, in regard to contract date versus settlement date. So again, a lot of people are aware, a lot aren't. It's not about, generally speaking, again, I'm not going to put words in your mouth about when, again, you can step through that. I won't jump onto your side, but just a quick heads up for people around, if they are selling an investment asset or property around the end of financial year, what's the important dates for them to be sort of careful of there in regard to contract and settlement?
Yeah, so it does fall into settlement date. So even if you sign your contract before, you still own that asset until settlement.
Perfect. So again, some people, again, in the past we've had where they've sold a property, but they may have not received their proceeds, so their capital gain event was falling in in this financial year potentially, but they haven't, they may have not have even received the proceeds, thinking that's going to be dealt with later on. So making sure that you're aware of when you sell a property, what does that contract date, when have you actually signed to sell it, and then speaking to your accountant, financial planner, what options are available, if any, because once again, for some of those, once you get past 30 June, it's too late to go back and rectify those.
Yeah, I think it's a good idea if you've got that investment property and you are going to sell it, speak to your accountant, and they'll sort of tell you, walk through all those steps, but it'll also tell you about all the records you got to keep, because any costs you incur in the selling, in the purchasing, is going to help reduce that capital gain. If you've lived in the property, having those dates as well, again, is going to sort of help reduce those capital gains. So making sure, even if, like, yes, it's going to be hard if you've had a property for decades, but we're still going to need those records, because yeah, the more stuff you can give us, the better probably result we can get for you.
Yeah, I think with some clients, you know, it definitely drags out over decades. It gets difficult from a record keeping point of view, but they can go back and scratch it together. You know, every time they can find $1,000 of, you know, of extra cost base or something, it might be a few $100s that they save in potential tax. So get them going back. And also from our perspective is, before you go to list a property for sale, speak to your accountant to get an estimate of what you think that capital gain position and potential tax might look like. So then you can forward plan on that as well. So instead of selling it, then working it all out after the fact, do some prep work on it, know what you think it will be. Then once you've got a sale, you can go back and clarify those things. Same with our shares and any sort of asset, I suppose. I suppose the other complexities around, and again, maybe just a really quick overview of things people need to be aware of in regard to deductions. So just from, you know, might be just lots of people out there who are just employees, so they might be limited in what they have available to them. But again, sort of, you know, income protection and any other sort of really basic things that you see people maybe missing in past years.
Sorry, Ben, I'm going to stuff this up altogether. I said the wrong thing before.
I thought you did. I was like, hang on. Like,
That's
maybe
not right.
That's all right. We go back to it. Let's talk about it again. So it's about contract date, not proceeds, isn't it? So again, contract date is the killer with those property sales. So with, again, the example I've seen in the past is someone puts the property on the market now. In June, they get an offer and they accept it. But for most properties, they're not going to settle within 30 days. So they're going to receive the proceeds in the following financial year. And by the time they get the proceeds, that tax year is done and dusted. So again, that's, I suppose, making sure that you speak. Again, you know that in advance, you can make some decisions about when you list a property, when you accept an offer, and all of those things, which can be guided by you guys.
Yeah, that's right. So if you are just your basic salary and wage earner and you sign a contract on 30 June, you've got a 90-day settlement and you want to lodge your tax return early, you don't actually have the cash until it settles. So you may need to hold off. And if your lodgement date is before October, you won't have the money to be able to lodge and pay on time necessarily. So you might need to engage an accountant to get an extension to be able to lodge your tax return and pay your tax return as well. And the other things to keep in mind is you'll have your fees, which will be taken out from surveyors, conveyancers, your advertising, your agent fees, to keep those in mind as well.
Perfect. And I think from what we've seen is sometimes there's the ability for people to use a one-off super contribution to negate some of those capital gains. Again, they need to have some other proceeds or release of a deposit or something, because they need to get that in before the end of that financial year as well. So trying to make sure you've got to deal with that before you actually get the proceeds has caught hundreds of people out, and everyone in the West likes to debate that point, but it's pretty rigid. So good luck.
And it's also, like, people need to keep in mind, if it's a house that they've lived in previously, but then they've rented out, or if they rented it out and then moved into it, your cost base will be different depending on your scenario. So it's not just I bought it for this and I'm selling it for this. The difference is my capital gain. There's so many other things. You might have moved in and out within a 6-year time frame, so you can apply that rule. There's a lot of other things to take into account.
Perfect. Again, maybe even this might be more so for people moving into the next financial year. Is there any tips that you see for people in terms of record keeping with their deductions and just expenses across the year that work really well? Like the old school sort of keeping your receipts in a shoebox doesn't really function too well anymore. Is there any apps or anything that you guys see just for people to track those things, or any suggestions around it?
Yeah, the ATO has some ridiculous record keeping rules. So there's been some big changes in the last 12 months. The big one being the home office. A lot of people sort of split their time between home and office now, and there's still the home office deduction, which is like a flat 67-cent rate. But the ATO, in all their wisdom, have said to claim that you also need to have the records that show it, and they want you to keep basically a working from home diary. So you just need to have a date, the hours you worked, and a really brief description of what you've done. So if they sort of do want to look at your tax return, you've got that home office there, you've got to produce that diary. And if you don't have it, they'll probably not allow your deduction there. But there is some great apps. The ATO actually have a pretty good one called, I think it's My Deductions. And in that, you can sort of, anything you sort of spend on work, it's got the ability to take a picture of your receipt. It's got like a logbook function in there. I'm sure at some point they're going to build a working from home diary function in there. And at the end of the year, you can just get a report from it and send it to your accountant. And you've also, then you don't have to keep your if you got the photo and the copy of the soft copy of the receipt, you don't need to keep the shoebox there either. But just on logbook, there's another one I've recommended to quite a few clients that like it, called Driver's Note as well. And that just, you get an app on your phone, you get in your car, it records where you start, where you finish, and you say it's business or private. You can add stuff in there if you forget to do it. But that's a pretty good one as well. So yeah, keeping a logbook, if you do a lot of driving your own car for work, is important, because you're like, if you've got a high business percentage, you can get a much bigger deduction than just claiming your Ks like a lot of people do.
Perfect.
And on the working from home,
keeping it along the way is going to make your job a lot easier at the end of the year than trying to go back 12 months and go back and say, oh, how many days did I do here, or what Ks did I do? Like any of these apps that can record it along the way will make it a lot easier when it comes to tax time.
Absolutely. We got to add something, Sim.
On the working from home, I was going to say, a lot of clients come to us and say, oh, I just work 2 days a week from home. So, you know, put those hours in as an average, but the tax office will knock you back straight away if they were to look at your tax return. So Andrew's actually got an Excel where you can go and fill it in, and your days off, it's got your public holidays, your sick days, and a lot of clients, it ends up being quite different to what they initially say, that the average might be 2 days, but it only works out to be X amount of days instead. So it is good to keep records, and you can always go back through your diary. We haven't found any clients that have said it's just too difficult to go back. Don't worry about it. They've always managed to get the deduction to us.
Perfect. I suppose, again, any sort of new area of deductions that gets, I don't know, maybe not the word exploited, but is getting utilized, is going to come under some scrutiny, isn't it, from the ATO? So it's all good and well to throw deductions in there, but you need to be able to verify that they're legitimate, and it's never worth it, really, is it, to fudge little bits and pieces like that? So again, you know, you want to make the most of the rules, but you've got to stay within them as well.
Exactly. Yeah. And yeah, as I said, like, if you ATO don't care about stories, which is a good quote I've heard. They look at facts. So if you can say, oh, I work 2 days from home, they're like, you should prove it. So they're going to need that diary. And if you can't prove it, they're just going to say too bad.
Perfect. And again, with apps and everything available to us and other little mechanisms, it's just about being proactive. So maybe this year might be a bit of legwork to go back over the last, 9 months, bring it up to now 8 months, 9 months, but then moving into July and onwards, make sure you're ready to go and prepped for the following year, so that you've got everything captured through the year. When you get to the end of the financial year, you're already done basically 99% of your work, and you can just forward it on to you guys, and probably makes your job easier as well.
Yep.
Any other sort of topical things from a tax perspective, or deductions, or anything at all you sort of want to throw into the mix, or anything you're seeing is, people are coming in regularly and not having prepared because they didn't realize it was a deductible item?
Probably a couple of not so common ones, but they're definitely good to have, is the income protection. So if you pay income protection outside your super, that can be a deduction. And then there are certain financial planning fees as well, which Sim actually put a blog on our website about this. If they're giving you advice about what investments to make and specifics and that kind of stuff, those actual financial planning fees are deductible. But it's not just your annual catch up, or if it's just a generic not generic, but like quite a broad advice sort of meeting, those fees aren't deductible. But if there's a nexus between the expense and you're getting some investment income, then that portion is going to be deductible.
Yeah, definitely a bit of a grey area, and people have got confused with that over the years. So again, we've, always looking at those apportioning of fees for what's happening for what area of advice. And again, sometimes there's a little bit of strategy that goes into that too, where we have clients that maybe only seeking advice about their super, but they actually make a contribution once a year to their super fund. That's the equal amount of those fees that they can then claim as a deduction themselves, essentially making their fee deductible by extension. So again, all those little bits around the edges, that's probably a crossover between our two expertise to make them get the best net outcome for everything from a cost perspective as well. I suppose just quickly for you guys, contact details, where do people find you? What's the best way to go about getting in touch if they want to book in time for an initial meeting and sort of intro? What's the process for you guys?
Yeah, so you can go directly on our website and book a meeting with Andrew or myself at a time that suits you. Our diaries are available up there, and the website is www.ascendaa.com.au. There's a big book now button to be able to find us, and we're situated at 17 Rutland Street, Newtown.
Awesome. And I think, again, for people who from either sort of wherever you're coming from this at, is if you're not sure whether you need to speak to accountant or financial planner, you probably need to speak to both. It's just about working out where to go first. So we're pretty good at identifying, maybe there's an order. Sometimes they're best to speak to the accountant and then to us. If they come to us first, we'll get you across to you guys and then loop back in at the best time. So you're better to try and speak to one and they'll direct you to the other than to not speak to anyone at all and just sort of guess your way through. I think the times of lodging your own tax return, again, be very few people where that would be the appropriate way to go about doing it, because everyone has complexities in their work situation. Talk about work from home, it's pretty much across the board that people have some component of that in their life at the moment. So, or will do ongoing. So make sure you speak to the professionals. Again, for us, jumping on our website, Instagram, Facebook page, following the podcast. These guys have been on the podcast before, so finances. So jump on and find their podcast and give that a listen. And again, we'll try and continue to give some more content insights throughout the rest of the year. So thank you guys for jumping on with a bit of a quick sort of tips and traps.